Hey guys, this is Rob. Thanks for joining me, lead trader in the oil trading room and indicatorsmart.com, where trading is science. Let's take a look at what we got this week. I got some cool stuff to share with you. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. The CFTC disclosure is here. Read that over and make sure you understand. Don't trade with the grocery money. Yeah. So this week's topic, I'm going to cover some techniques in market mapping that we use in the room every day. Actually, we use it pretty much every period of the day. I'm going to show you an example using this kind of technology, this kind of science that can help you with your trading. Yeah. You might enjoy taking a look at the reviews page, oiltradingroom.com/reviews, and see some of the recent reviews that we have there. Yeah. Market mapping. This is our super map for today. Today's Thursday. I'm doing the review a little bit early this week. And you can see by looking at this, it gives you ranges that you expect over various intervals of time. Yeah. Various intervals of time. These are median ranges, and so what they do is they tell you basically the 50-50 point. There's an interesting thing that happens in financial markets is something that we call skewing. Skewing is where the average is actually hit more than 50% of the time. And this happens in the market all the time. So any of these numbers, say on this range 1, these numbers are hit at about random or a little bit better than random usually, but then there's numbers that we also use that have really high hit rates. And the example I'm going to share with you today, I'm going to do this 1 in E period today. And show you how that works out. The median range expected for that period is 45 ticks. But another thing that we knew from this particular period was that the range was going to take a pretty good sized jump there. You can see this goes from 73 to 85, yeah, and so it's like 12 ticks or something. But this one is jumping 25 ticks or so. Yeah, right there. And so this period here is of particular interest because it is expected to have a particularly large range. Yeah. And so next I'm going to show you a distribution table that tells us that you're going to go 25 ticks on this interval. And you can subtract that number there, that 11.76 from 100, and you get approximately 88% to go 25 ticks off the open. Yeah. And so we know that. Then you go back and look at that slide again. What was the expected range? It was 45. And you can see that that is actually hit about 61%. Yeah. And so, like I said, those numbers get hit more than average, even though the number is average. And what that tells you is that there's statistical skewing going on in the data. And that opens up for us opportunities to take advantage of situations like this. Now, this block down here, and I've covered this in some prior updates and webinars, tells us that we are going to take out the prior 2 periods at 90%. And so what does that look like on a chart? Well, when we opened up here in this period, I had drawn this box here on the screen, and the prediction was that we're going to break or at least touch the edge of this box right here. Yeah. The open of the E period was right here. And our prediction was that we were going to, we can go back and look at that, hit 25 ticks at almost 90%. Almost 90%. And so once that period open, each of these bars is 5 ticks. Go 1, 2, 3, 4, 5 bars is exactly 25 ticks. But we had a second statistic that also said that we'd go to the edge of the box. So the 25 ticks was to here, and then the edge of the box was there. So we actually had 2 statistics that were telling us that we were going to do that. When that happens, what you get is called probability stacking, which is a concept that we use in the room. When these things add up, you got 90% and 90%. If you take a look at the probability of 2 90% signals, the probability of that occurring is exceptionally high. Exceptionally high. In fact, I could just compute that right now. It's upwards of 100%. But I'll pull it up and compute it for you if I can find it. Here it is. Here's my spreadsheet here. So if you get 2 90s, it's 99%. That's going to do that. Yeah. And so we see this kind of thing happen over and over again in the room all the time. And so market came up to that edge and faded away from it, and then it retested it and before it came lower. Yeah. We also do the same thing in A period. We do the same thing in B period. We do the same thing in C period, etc. throughout the day. But it also tells you some other things. It can tell you where, because there is the situation where you're before that event occurred of meeting the stat and after. Yeah. And so trades that you get that line up with the with these kinds of statistics are even a higher probability, so you get even more probability stacking under these kinds of circumstances. This is just an example of the kind of things that we do with market mapping and probabilities in the trading room every day. Yeah. If you would like to learn more about this kind of thing, I'd invite you to join us in the oil trading room. It's not like anything else out there. Yeah. I've been doing this for close to 30 years now, and our capacity for being able to do these kinds of things has just grown and grown, and we're doing all kinds of research in the room, and it is resulting in even getting better and better all the time. Yeah. So science plus probability stacking equals high theoretical probabilities, high historical theoretical probabilities. And when you see these things happen over and over again, it can give you a ton of confidence in your trading, as you'd see on the reviews page of the website. Yeah, the oil trading room, where trading is science. Yeah. If you have any questions or would like to learn more about how we do this each day, you could contact me through the website, but better yet, just go to oiltradingroom.com and be sure to key in the coupon code BLACKGOLD249 for a nice discount. Yeah. And these days members are reporting me, new members usually have a pretty good handle on this stuff within 2 to 3 weeks or so. Yeah. And so if you come into the room with a good commitment towards achieving that, and towards doing the work to get some of these concepts, because some of these concepts will be a little unfamiliar to you at first, and but once you get them, you own them for life. Yeah, so it's pretty awesome. Yeah, so you get all the resources from this recap of techniques we're using in a room at oiltradingroom.com. Be sure to use the coupon code there, join the room. And you can learn more about the tools and resources that we use at indicatorsmart.com. Yeah, get what you like at these sites. Yeah. Thanks for joining me for this week's recap and for learning a little bit about what we do in the oil trading room and using the tools from Indicator Smart. Yeah. Thanks. Have a super weekend, and we'll see you again on the next one. Thank you. Thank you.